Welcome back to my channel. If you're juggling more than one job or earning income from both employment and side hustles, maybe you've got a combination of wages, freelancing, investments, and rental income, then tax time can get complicated. Without correctly withholding taxes or having wrong estimate of your income, you might owe hundreds or even thousands in unexpected tax bills at the end of financial year when lodging tax return. In this video, I'll explain how multi-job and multi-income workers should handle their taxes in Australia for the 2025 to 26 financial year. We'll cover the common traps, the 2025 to 26 rules, and the practical steps to make sure you stay on top of your tax and out of trouble. What counts as multiple income streams in Australia? When the ATO says multiple income streams, they mean any situation where you have more than one source of assessable income. This can include 2 or more PAYG jobs. For example, you work in retail on weekdays and do hospitality on weekends. PAYG job plus freelance or contractor work. PAYG job plus investment income, like shares, dividends, interest, or even crypto trading. PAYG job plus rental income from a property. Multiple small businesses. Government payments alongside wages, like job seeker, youth allowance, or pensions. Here's why this matters. Each employer or payer might only withhold enough tax for the income they pay you, not your total combined income. When you add everything together at tax time, your total taxable income could be in a higher bracket, meaning the tax that was withheld during the year might be too low. As a result, you could end up getting a big tax bill instead of a refund. Let's quickly refresh the current resident individual tax rates for the 2025 to 2026 financial year. Now here's the trap for multi-job workers. If each employer thinks you're earning under a certain bracket, they'll withhold less tax than you really owe based on your total combined income. Example, Job 1 pays $50,000 a year. Job 2 pays $30,000 a year. Individually, they both are in lower brackets, but combined, you earn $80,000, so part of your income is taxed at 30%. If your employers both apply the tax-free threshold, you'll almost certainly underpay tax during the year. When you start a new job, you fill out a tax file number declaration form. One of the questions is, do you want to claim the tax-free threshold from this payer? You can only claim it from one employer at a time. If you claim it from multiple jobs, you're telling each employer to withhold less tax because they're assuming your first $18,200 of income is tax-free. But you only get one $18,200 exemption across your total income. If you double claim, you'll likely have a large tax bill at the end of the year. Here's the tip. Claim the tax-free threshold from your main job, usually the one with the highest income, and select No for other jobs. Do you know you can make PAYG withholding variations and pay extra tax throughout the year? If you have multiple jobs and your combined income pushes you into a higher bracket, you can ask any of your employers to withhold extra tax. You can do this by writing. You can also apply for a PAYG withholding variation with the ATO. This adjusts your tax withheld so you don't get a surprise bill. This is especially useful if you're a casual worker with fluctuating hours. You earn bonuses or commissions from different jobs. You have extra income like rental property profits. The ATO provides calculators online so you can estimate how much extra should be withheld. Other common tax traps for multi-job workers. It's not just the tax-free threshold. Here are some more traps. Medicare levy surcharge. If your income exceeds $97,000 for singles or $194,000 for families in the financial year, and you don't have private hospital cover, you may owe an extra 1 to 1.5% of income. HECS help repayments. Your repayment threshold is based on total worldwide income, not just one job. For financial year 2025 to 2026, repayments start at $67,001. If both employers think you earn below this, no repayments will be withheld, but you'll still owe it at tax time. Centrelink repayments. Certain government benefits are income tested. If your combined income is too high, you may need to repay part of it. Fringe benefits tax reporting. If you receive fringe benefits from multiple employers, they can combine and push you over thresholds. Remember, the ATO now gets real-time data from employers via single-touch payroll, banks, credit unions, and PayPal. investment platforms like ComSec or Sharesies, property managers for rental income, ride-sharing and gig economy platforms like Uber, Deliveroo, and Airtasker. This means your total income is already on the ATO's system before you even lodge your return. If your lodgement doesn't match, they'll flag it. Here's a checklist to help you reduce the tax bill. 1. Only claim the tax-free threshold from one employer. 2. Estimate your total annual income throughout the year. You can use the ATO's online tax calculator for financial year 2025 to 2026. 3. Adjust withholding from your second job, either via your employer or the ATO variation form. 4. Track all your income: wages, bank interest, dividends, side hustle income. 5. Keep receipts for deductions. Even if you have multiple jobs, you can still claim work-related expenses, but they must be directly related to earning that income. 6. Consider quarterly tax planning. If you're self-employed or a contractor for part of your income, set aside around 30% of that income for tax. 7. Check your MyGov account. Review your ATO pre-fill data before lodging. 8. Last but not least, a tax agent can always help structure things ahead to reduce surprises. If you have doubt, don't do the guesswork yourself. Speak to a registered tax agent. A professional advice or a small adjustment now can save you a big headache at tax time. Thanks for watching, and if you found this video helpful, hit like and subscribe for more Australian tax and finance tips.